Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from Discord. Let's jump right into the gold market here. We are getting a little bit of action here this morning. Silver is stronger than the gold market this morning, up about 34 cents. The gold market at about 28.28 now, and the high so far has been about 28.44. The gold market is down 11 with a high of 18.08, not quite getting up to that 18.09 level that we were looking for, or 19.09 actually. So we are a little bit reverting, and so let's just give it a few minutes here and see what the market wants to do here today. To identify today's pivot points, we're looking at an average of about 1892 on the daily. The buy one level is 1881. The buy two level is 1861. The sell one level of the extreme above the average price is 1912. The sell two level is 1923. As we take a look at the market here, particularly on the Globex here, it traded above the average, the daily average of 1892, and that essentially put the daily and the weekly market in an uptrend, with the weekly activating a target of 1924 and the daily a target of 1912. If you look at the daily on the left of the chart, you also see the sell to level at 1923. And this pretty much matches almost exactly the weekly sell one level of 1924. I talked to you about the harmonic relationship that is the optimal level basically to execute the VCPMI signals. And that is usually when the prices are aligned almost at par, and that is what is called a harmonic alignment, and that is a very high probability that the shift of the trend can unfold. Let me stop here for a minute here. I want to check to see. I have some technical difficulties. And the only other place that we're looking at the harmonic relationship basically is in this buy one, buy two level of 1860. I apologize for that. We're trying to resolve some technical issues here. Coming back here to the market, 1861-60 is another harmonic relationship. The market is coming down, or came down very close to the 1881, which is the buy one level, and the low so far is 82.80, and so we are trading around the average price, which I continue to say that it is 50-50 standard deviation. So as we go live right now in Discord, we seem to be having some issues with YouTube, but let's continue with the live show and see where we go from here. But so far, again, the markets come down to the weekly average of buy two here. I'm sorry, the buy two level is the 1861, 1860, second level of the harmonic relationship that we're looking at. What we want to see here is the 1881 level, which is the buy one level, be activated either by the market coming down to that level or pretty much activating the buy trigger from buy one, or reverting right back up above the daily average price of 1892 and 1890. The silver has completed the target of sell one a couple of times, actually, by going up to about 28.44.50, and we're trading 28.30. So we've tried to test this level a couple of times and reverted from 28.45 to the low that we saw of 28.16, and it gave you enough room for a profit on the trade. So if you did not trail the stop, obviously what you want to do is use the close above 28.38 to stop you out, as a close above 28.38 activates the 28.63 to 28.72 targets. We have a little bit of a mixed signal here because the daily is activated a couple of short triggers, as you can see here, but the weekly is still in an up mode by trading above it here with a target of 28.72. Still very active. So hold on to this position. If you traded the short side, obviously following the methodology here, you want to trail it with a stop or use the 28.38 close above as a stop. Let's continue to watch this market at this levels here, and I will update you here very, very shortly. things got a little bit of slow here as the market came down below the average prices daily here of 1890 and 1892. Let's take a look at coin here. About 223, 224. It looks like the market is moving up here. GBTC also is moving up here. So continue to hold the virtual currencies and just prepare yourself for the volatility that they offer, which is a tremendous volatility to trade, but you want to measure that accordingly. In that not overtrade, basically. Very quiet market this morning. If we come down to 1881 to 1883, that would be a good place to expect the market to revert from there. Or if it goes back up above 1892. One of the things I want to point out here is the 10-year note is actually down to about 145, and it has taken the edge of the inflationary fears. At least the market has. The sentiment of the market out there is very much overwhelmed with reports about inflation and you know how inflation is going to run away. And it is true that short term we have experienced some kind of a bottleneck squeeze based on the supply problems that we're having due to the shortage of labor as well that we've been experiencing. So in essence, this government, by supplying all this money to Main Street, really has created its own worst enemy, in that people that are getting the stimulus are making more money by staying home, particularly in the service industry. And so it's a counterproductive monetary policy that I believe is indicating to be a potential problem as we move down the road. The objective that I believe we want to have right now is to create and motivate people to go back to work as we are moving into a more normal economy. Although it's questionable, what normal is, because we're beginning to see spikes in infections once again. In Australia, I believe, already have implemented some policies, some lockdowns, I believe, once again occurring. And the risk in Europe is still very high as far as infections are concerned. So we are still dealing with a very fragile health situation globally, and needless to say, it's affected the labor aspect of our economy, in that because of the lockdown, obviously people are not coming back to work as readily as one would think they would. Not only that, but the situation has created a new paradigm, basically, that people are finding that they can actually work from home. They don't need to go to the office. So the market is calibrating into this new normal that basically is a combination of some old principles with a virtual economy that we're moving into, that is essentially changing everything in sight. And it's changing in such an accelerated pace that it's just incredible. One of the aspects of this economy, obviously, is the currency, the virtual currency assets that have been created, and that's pretty much one of the reasons why we have aggressively been focusing on Coinbase, which is an application to trade in the virtual currencies. And I think it's in its early stages, because I don't think this market is going to go away. I just think the more attention it's given to, the more people are going to realize that people have become extremely wealthy by trading this virtual currencies, these virtual assets. And it appears that the application of technical analysis can be applied very successfully as well in this market. So if you been a trader and you understand technical analysis, then you're ahead of the curve, because these markets are very, very much technically oriented. Primarily, obviously, they're digital. And it is not a coincidence that Bezos is going to space, that Elon Musk is going to space, and when you're creating this new culture, obviously, fiat currency is not part of that system. And so we're moving aggressively in terms of creating a monetary unit as a form of exchange, basically, in the digital economy, in the virtual economy that we've built. And we've seen just an explosive growth, even going back to last year, right after the crash on March, April, the market, the stock market basically anticipated this tremendous explosive move, and we have made a high of 42.49 on the A-mini S&P, when we were trading only at 2200 here back in March of last year. So it's been an incredible journey that essentially has shifted the paradigm as we knew it, pretty much to this incredible virtual economy that is changing the face of manufacturing, the face of just about every aspect of the economy. One of the comments that I want to make with regards to the labor shortage here, particularly in the service industry, that I believe what's happening here, where we're moving into, basically, with regards to the minimum wage and the pressure on wage increases. Companies like McDonald's or fast food services are replacing people with robots at a less less expensive maintenance than paying somebody the hourly wage and have to deal with a lot of personal issues and problems as well. So, I think we're moving into a transformation of replacing this labor shortage potentially in the service industry, ideally with robots. And so this is the other side of the coin here, that the shift in the labor market is very profound. And if companies do not have access to the type of labor that they need, they're going to be replacing people with computers. They're going to be replacing people with robots. And McDonald's is a very good example. If you go there, you're going to see complete automation in just about everything. So less people, more robots in the service industry. How that is going to affect the labor industry and these unemployed people, that are unskilled, basically, I think are going to, we're going to go through some really difficult times as we move back into so-called this new normal economy. But, again, it seems that spikes are increasing again in the, in several sectors, in travel, cruise liners, and so I don't think we're out of the woods yet. And on top of all of this, obviously, we are dealing with this short-term inflationary spike that we have seen, obviously, as a consequence of a shortage just across the board because of the pandemic. From labor shortage now to computer shortages, computer chips, plastics, and potentially as we move into the summertime, it appears, are going to experience one of the worst droughts in the history of this, particularly in California, of this state. And so there are a lot of what I would call flying black swans that can snap any time, and shift the cradle, so to speak, of the economic system that we're looking at. And so the question is, what do you want to be in terms of trading, or where is the most profitable place to be? And I come back and I point out once again that due to this tremendous increase in the monetary system of applying supply, not only here in the United States, but on a global basis, to create economic growth, productivity, is not really showing the results that were expected initially. The hopes, I believe, were that this money that has been created out of thin air will come back into the system and rotate through the system, creating economic recovery. But we're still dealing with again with the casualties of this collapse of the old economic system due to the pandemic. So, are we going to see inflation run away, which is what the majority of pundits out there seem to indicate? I don't think so, to be honest with you. If I take a look at the 10-year note, the 10-year note is indicating that this inflationary is going to be transitory. Now, how transitory is it going to be, and how long is it going to last? Obviously, it's a question of the velocity of money going into the system looking for this goods that are not available. And the reality is that it's going to take some time, to go back into this system and begin to recalibrate it, pre-COVID, at the levels of pre-COVID. So regardless, it's going to take some time to replenish these goods that are in tight supply across the board. And it's a question of, how long is that going to be? So it's going to be interesting as we move into the summertime, pretty much what this markets can do. In the meantime, coming back here to the gold market and to the silver market, even though we may see some short-term corrections here as we move into the distribution of supply areas, it appears that these corrections are going to be counter-trend to the major uptrend that is developing here, as we now are trading very close to that 1900 handle back and forth. Continue to hold your long-term core position and continue to trade the market from the long side, as I believe that, again, this correction should be completed and we should resume the uptrend here towards the end of this month. Thank you again, my friends, for the opportunity to share this with you. I hope that you have a fantastic trading day today and also a fantastic weekend. We'll talk to you soon.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.